Hello and welcome to Trading with Rob. I'm Rob and welcome to the DAX daily markup for Friday the 27th of March 2026. Bit of a late review, but that's what it is. So overall on the day, from the initial gap up of about 63 points from yesterday's close, we had a sell bear trend, sell the close bear trend from the open, forming a wedge bottom, which then went into the trading range, for the rest of the day. It's pretty climatic selling, which stayed below the 5-minute EMA and 6-minute EMA, shown by the solid blue line and dashed blue lines respectively, for most of the day. So initially we had, as mentioned, a consecutive strong bear bars, sell the closed bear trend from the open, forming a very strong tight channel down, which, because of how tight it is always likely to have any pullback any initial pullback is likely to be minor. We can use the open to close of the bars as an initial measured move target down, looking for where we might be able to take profits later on in the day. And this initial strong leg down formed a small parabolic wedge. Any pullback is likely to be minor when the selling is so strong, and we got a two-legged pullback towards the 5-minute EMA. Although it doesn't look as perfect as what it could have been, it still, I think, functions as a two-legged pullback, and it's fine to sell these closers more than looking to buy them. We then had another series of climatic strong bear bars. It's a second leg down, but not quite reaching a full measured move down of the first leg. So normally the market likes to move in symmetric moves down, so it might be more expected to have a second leg down that's more similar size to the first leg. And then we had a series of consecutive bull bars in a strong bear trend, forming a larger pullback towards the 5-minute EMA. It's also testing the breakout point, but as the bars selling continued, the bars reduced in size, and tails above the bars showed that the upside might be limited. Then had a small continuation down with a two-legged move to a slightly higher low and a contracting range, which then tested the 5-minute EMA a bit more fully, forming a triangle, which then became a final bear flag. Then had another number of consecutive strong bear bars, which formed another sell climax, and these consecutive sell climaxes are unsustainable and likely to lead to a reversal or trading range. In this case, the selling's been so strong that it's more likely to need to go into a trading range before the bulls can try to get a trend reversal. And this formed a wedge bottom at the measured move target. This last leg down was particularly climatic and looked more like a vacuum down to the possible measured move target, where the bears took profits early, which is shown by the tail not quite reaching the measured move target. We then had a reversal, series of bull bars reversing, testing the breakout, the apex of the earlier triangle, which was a area of agreement, and then a trading range where a number of double bottoms, double tops, and wedges were formed in the upper and higher, lower ranges of the trading range. Because the range was relatively large with a 100-point range, it's large enough for stop orders or limit orders, depending on what you're more comfortable with. And we are typically looking to buy low, sell high, and scalp, and looking for entries using double bottoms, double tops, and wedges. Although we do need to be careful of strong second leg traps in the upper and lower extremes, and remember that 80% of breakouts do fail. So when there's a two-legged trap or move up to the obvious resistance of the 60-minute EMA, need to be very careful and understand that it's more of a test that's likely to fail. So when a good entry bar like this bull bar here, or the multi-bar reversal pattern forms, we know it's likely to be going lower. And then there's a wedge pullback into the range, into the trading range, going into the close. For best entries today, stop entries, I think selling below any of the consecutive bear bars on the open is reasonable, looking for a possible move target as we've discussed. Once we get to the lows, with such a strong tight channel, we know that it's most likely that the bear trend is going to continue. So we definitely don't want to be looking to buy. If anything, because there's this strong bull bar, it might be reasonable to get out above that and take profits, but really we're looking for a two-legged pullback, and in this case looking to continue selling. Selling more consecutive bear bars is reasonable, and given how tight this initial channel is, I don't think it's reasonable to think that the bull trend of a reversal is going to happen at this stage. So want to either stay short with an appropriate stop above the top of the second leg, or exit and go flat and look to get short later on, or long, depending on if there is a breakout, a more reasonable major trend reversal forming later on. Although this is a slightly higher low, I think it's again more selling pressure, reasonable to sell, as long as we're still using a reasonable stop. And then looking at a reversal at the EMA in a triangle, reasonable to sell below again. And then once into the trading range, we're looking to buy low, sell high, and scalp. And on any failed breakout or above that looks like it's going to break out, at obvious resistance, it's reasonable to sell below again for a scalp. Either of these two entries would be good. So overall, that is the full analysis for the day. If you have any questions or comments, please, I'd love to see them. And thanks for watching.